According to analysts at a brokerage firm Bernstein, cryptocurrency assets have entered the age of infinity. Despite the poetic nature of this expression, it accurately reflects the outlook for Bitcoin and altcoins. Yesterday, the flagship cryptocurrency again broke through the landmark resistance level of $100,000. Meanwhile, cryptocurrencies are becoming increasingly integrated into the financial systems of both individual companies and entire nations. For example, the United States plans to create a strategic fund in Bitcoin, another form of the country's gold reserve. Bitcoin is seen as a digital gold by Fed Reserve Chairman Jerome Powell. It's not a competitor to the dollar, but it's certainly a rival to gold, he said earlier at the Deal Book Summit. Considering that Bitcoin's price coincided with the US dollar dropping to its weekly low, such a statement appears somewhat controversial. The index measuring the dollar's position against six major counterparts traded lower at about 108 points on an early Tuesday. However, there are other reasons behind the decline of the world's leading fiat currency. On a Monday, the dollar fell against the euro and the British pound following a Washington Post report suggesting that Donald Trump's tariffs might be less aggressive than initially announced. Nevertheless, the future US president quickly and firmly denied such a possibility. At the same time, it often seems that he lacks a clear action plan. For example, regarding China, he initially promised to raise import tariffs to 60%. But after winning the presidential election, that figure dropped to just 10%. By the way, the oil market also felt the impact of the US president at the start of this week. This time, the culprit was Joe Biden, who 2 weeks before stepping down blocked oil and gas development on offshore fields indefinitely. The ban covers 2.5 million square kilometers of U.S. coastal waters in the Atlantic and Pacific Oceans. This memorandum led to a rise in oil prices and sparked outrage from Donald Trump, who promised to overturn it as soon as he takes office. At the same time, oil is trading lower due to China's feeble economy and issues in the EUROZONE. However, the drop is halted by the onset of winter cold and Saudi Arabia's announcement of price hikes for Asian buyers in February. As a result, Brent crude entered a correction phase on a Tuesday, trading within the range of $75.90 to $76.30 per barrel range. At the same time, the Washington Post report triggered a relief rally in the euro-dollar pair. There was renewed hope that European manufacturers might avoid US tariffs after all. One of the key drivers behind the pair's decline in the fourth quarter of last year was the fear of trade wars. As a result, the euro reacted too strongly to the good news that it jumped 1.2%. However, after Donald Trump's denial, the euro-dollar pair corrected and fell below 1.04. Nevertheless, the euro still has a chance to retest 1.0435. A clear breakout about this technical resistance seems unlikely. However, with the upcoming economic data releases, the long-term bias for the euro could shift upward within the range of 1.0300 to 1.0465. The single currency is also supported by strong inflation data in Europe. For example, consumer prices in Germany rose to 2.6%, marking the highest level in almost a year. Meanwhile, today's report on inflation in the Eurozone logged an increase to 2.4%. The inflation report published this week is the last before the next ECB meeting on January 30. Rising inflation could prompt the policymakers to revise plans for rate cuts. Regarding the Russian currency, its moderate growth in a late trading yesterday was likely due to the closing of long positions after 4 days of decline. The ruble was also supported by growing oil prices, and as a result, the ruble regained almost half of its previous losses. However, the downward correction of the dollar failed to break support level at 101, so the dollar-ruble pair reversed upward, extending its uptrend. Meanwhile, trading activity remained low during the public holiday in Russia. The official exchange rates for the dollar and the Chinese yuan were set back on December 29 and stand at around 101.60 for dollar and 13.4 rubles per dollar for yuan respectively. So that's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news with us. See you online soon.